For decades, we've seen one of America's most persistent tragedies met with the same arguments, the same debates. But what if the answer isn't about changing hearts and minds? What if it's about changing the math? Today, we're going to break down the SHIELD initiative, a radical plan that uses the cold, hard logic of finance to do what activism alone hasn't been able to.
So here's our roadmap. First, we'll get real about the deadly status quo. Then, we'll unpack what the financial shield actually is. We're going to dive deep into the math that makes it all click, see how it could be funded, tackle the tough questions head on, and finally, look at the economic checkmate this whole thing creates.
To really get why an idea this radical is even on the table, you first have to stare directly at the numbers behind the current crisis. And these are numbers that, tragically, just haven't changed for decades.
Every single year, somewhere around 3,000 young Black Americans just between the ages of 13 and 24 are killed by gun violence. Let that sink in. That's not a 10-year total. That's what happens annually. It breaks down to about 7 or 8 young people losing their lives every single day.
And this isn't just one of many dangers they face. For Black youth in America, homicide is the #1 cause of death. It's not car accidents, it's not cancer, it's not anything else. This is the single greatest threat they face, period.
And to put an even finer point on it, the homicide rate for young Black men is about 14 times higher than it is for the general population. It's a crisis of just staggering, unacceptable disparity.
You know, we've tried so many things, protests, voting, endless policy debates, and still, those numbers barely move. It really makes you wonder, right? What if we've been using the wrong tools all along? What if, instead of asking the system to care, we made it financially impossible for the system to ignore?
And that question brings us right to the core of this idea, the financial shield. And let's be clear, this is not a moral appeal. It's a financial instrument designed to turn a systemic problem into a massive liability for one of the most powerful industries on the planet.
So what is it exactly? Well, the SHIELD initiative is a plan to organize and help pay for large-scale term life insurance policies. We're talking $1 to $2 million each on Black youth in the highest risk areas. The whole goal is to create a new financial reality where every single life lost costs the insurance industry millions.
The logic works in 3 simple steps. First, a community fund helps families buy these big policies. Second, as thousands and thousands of these policies get written, the insurance industry is suddenly facing billions of dollars in potential payouts directly tied to gun violence. And third, you hit a tipping point. A point where it literally becomes cheaper for them to fund violence prevention programs than it is to keep paying out death claims.
And if this sounds a little out there, it's really not. We've actually seen this exact logic work before. It's how our roads got safer. Auto insurers didn't start lobbying for seatbelts and airbags because they had a moral awakening. No, they did it because every life saved was a claim they didn't have to pay. The SHIELD initiative just takes that same proven financial logic and points it at gun violence.
Okay, this brings us to the absolute heart of the matter, because you can debate the morality of this, I guess, but you cannot debate the math. The numbers are what make this whole idea so powerful and, frankly, so dangerous to the way things are.
So let's start with a baseline number. The entire U.S. insurance industry spends about $172 million a year on federal lobbying. That's their war chest. That's the money they use to shape policy and protect their interests. Just burn that number into your brain, $172 million.
Now watch what happens if just 15% of Black youth in that target age group are enrolled with million-dollar policies. Boom, the annual payout liability for the industry hits $990 million. That is almost 6 times bigger than their entire federal lobbying budget. All of a sudden, their influence money looks like pocket change compared to their new liability.
But let's take it even further. At 25% enrollment with $2 million policies, the annual exposure just skyrockets to $3.3 billion. That is 19 times what the industry spends on lobbying. At this point, spending a few $100 million on violence prevention isn't just a smart move. It's the only rational financial decision they can make.
Now here's the kicker. This is the part that makes the whole thing legally airtight. Even with these massive potential payouts, the policies are still profitable for the insurers. They'd still collect more in premiums than they pay in claims. And that makes it incredibly difficult for them to just refuse to write the policies without opening themselves up to massive discrimination lawsuits.
Okay, this all sounds incredibly powerful, but it brings up the biggest practical question of all. Who pays for this? The families most at risk are often the ones least able to afford the premiums, and the answer lies in a collective, community-funded approach.
You see, the funding doesn't have to come from one single place. There are about 5 million Black households in America earning over $100,000 a year. There are 900,000 Black millionaire households, and there are 14 Black American billionaires. The resources to create a powerful, self-sustaining fund are already there, within the community.
And look at how achievable this becomes when you break it down. If those 5 million households with six-figure incomes chipped in to fund 200,000 policies, the cost for each household would be about $6 a month. $6. That's less than a fancy coffee, less than a streaming subscription. It turns a monumental challenge into a completely manageable collective action.
Now, of course, an idea this disruptive is going to face some intense criticism, so let's just get right to it and tackle the most common objections head-on, because the people who designed this plan have already thought through them.
This is the first and most emotional attack you are going to hear, that this plan puts a price, or a bounty, on a child's life.
But the rebuttal is simple, and it's logical. The beneficiary of the policy is the parent, just like every other child life insurance policy sold in this country. To argue against this is to argue against the entire concept of life insurance for minors. And that analogy we used earlier still holds up. Auto insurance doesn't incentivize people to go out and crash their cars for a payout.
Okay, on to the next big practical objection. Why wouldn't the insurance companies just refuse to play ball? Why wouldn't they just deny coverage or jack up the rates so high that it becomes impossible?
And this, right here, is the strategic genius of it. It's a checkmate, because either action they take actually helps the cause. If they write the profitable policies, great. They take on the financial liability that forces them to act. But if they systematically deny profitable policies to a legally protected class, well, every single denial just becomes another piece of evidence for a massive discrimination lawsuit. There is no easy way out for them.
So let's bring it all home. The ultimate strength of the SHIELD initiative is that it doesn't try to fight the system from the outside. It gets inside the system. It uses its own cold, rational, profit-driven logic against itself.
I mean, just think about how powerful this is. This requires no new laws from a gridlock Congress. It needs $0 in government funding. It simply hijacks the immense power of financial incentives. And it's all built on a precedent that has already saved millions of lives on our highways and in our homes.
So, we've seen it. The model is sound, the framework is solid, and the precedent is undeniable. This isn't really a question of if it can work. The only question left is, do we have the collective will to actually use economic power as a shield for our children?